Bloomberg Audio Studios.
Podcasts, radio, news.
I'm Haslinda, Amin in Singapore, where the 11th Annual Milken Asia Summit is underway. We want to welcome Bloomberg television viewers, as well as radio listeners all over the world. Well, joining us now is Ray Dalio, founder and CIO mentor at Bridgewater Associates. Ray, good to have you with us.
Good to be here.
Global leaders, they're grappling with a host of issues, but you say there are 5 key factors, forces that are perhaps defining and shaping the global economy. Before we get there, though, today, a big day for the markets, the Fed front and center, 25 of 50. That is a key question. And I know you said before that you're right 65% of the time when it comes to markets. So what's the bet on?
I think it's such a silly bet, like 25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. Okay, Fed policy. What does the Fed have to do? Fed has to keep interest rates high enough to satisfy the creditors, that they're going to get a real return without having them so high that the debtors have a problem. So now if we're looking at this, whether it's 25 or 50 basis points, 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse, and that affects more people, then it's probably 50 basis points. But let's get beyond that, okay, and talk about these 5 big forces. The first of those forces is the force that you're referring to, which is, excuse me, the debt, money, economy, dynamic, and force. Okay, so we have a big debt increase, we have an enormous amount of debt, and it's going to keep increasing, and one man's debts are another man's liabilities. Okay, so what is that going to mean for monetary policy? Okay, as you have to sell more and more of those bonds, what will be done? I think the same thing was done in Japan. That what happens is there's not going to be a default. Of course there won't be a default. But increasingly, they have to drive down real interest rates so that real interest rates are significantly negative. So you're going to have, in order to service the debt, you have to have a significantly negative real rate, and you also have to have then the depreciation of the value of money because inflation rises, so that you have to have a nominal growth rate, in other words, inflation plus real growth, that is above the nominal interest rate, and you have to have a real interest rate that is negative, and you have to have a positive slope yield curve so that holding bonds is a bad deal.
What is the state of the U.S. economy? I mean, we're talking about 25 or 50 based on the assumptions of how the economy is doing.
Okay.
From the data that we've gotten so far, does it justify 50? I mean, what does it say?
We have a model for estimating what should be. The economy right now is very, very, very close to an equilibrium level in many ways if you're just looking at what is and you're not looking at the debt problem. And it would look like there should be a modest easing of interest rates and a move gradually to a more positively sloped yield curve, what we would call normal. It's fairly normal, except it's not normal in the way that it's so skewed. So if we look at the markets and we look at the way the population's income levels are for the various sectors, if you look at the bottom 60%, if you look at the politics, the left and the right, and the nature of what is going on, the two worlds that we live in terms of that, the economy and the values, that brings us to the election. So if we are talking about, let's say, monetary policy, you have to look at the 5 forces. So back to the 5 forces. The first force we talked about. The second force is the force of internal order and disorder that progresses in a cycle. There is hard left and hard right. So there's ideological differences that are creating a political situation that leads us to not only have possibly different policies, dramatically different policies, which will have an effect on the economy and have an effect on the markets, but even worse or more concerning is that it's conceivable that one side or another might not accept losing. Okay, so will we have an orderly transition of power, and will we have an orderly democracy in which there's the ability to have disagreement and the resolve of those disagreements? I think that these are really questionable situations. So the second force is that internal order disorder force. The third force is the great power conflict. In other words, throughout history, there's a time when the rising power challenges the existing power, and there's a world order thing going on. And that world order thing going on has to do with China, the United States, and so on. And of course, it becomes even more important than the economy because it's considered national security, okay? The fourth influence is, through time, is acts of nature, droughts, floods, and pandemics. And climate is a big influence. It's going to cost us $8 trillion a year, it's estimated, in one way or another, in a world economy that has $100 trillion. And the fifth force, of course, is technology. Okay, man's inventiveness of technology. Throughout history, those five forces have interacted. So when we look at things, I think that there's the 25 or 50 basis points. Let's get beyond that. Let's look at the whole arc of that in terms of the changing of all of those five forces and their interrelationship.
Let's get back to internal conflict and link it to the U.S. elections.
Yeah.
How do you see it playing out? How do you see the next few months, 50 days to the elections? How do you see that playing out?
Well, as I say, I think that there's two questions. First, the question of, will we have an orderly transition of power? That's quite amazing. Will we have democracy work as it is? That cannot be assured, right? So, because behind all of this is that we have irreconcilable differences, not just pertaining to taxes and wealth and economic policies and so on, but in terms of values. It's how do people raise children related to sexuality and all of those things. There are those gaps. So I think we hope for an orderly transition of power. Isn't it quite amazing that we would think, could we not have that? And then we go beyond that, and then we say, what about those policies that are going to be dealt with? Nobody's going to deal with the debt policy. That's going to end up being monetized down the path. Then the question is issues of taxation, and those issues of taxation will have an important impact on the capital markets. If they're bought for after-tax returns, by and large. It's the important thing. You lower corporate income taxes, you raise corporate income taxes, it makes a difference to prices. So we're going to have those issues, a lot of issues to talk about regarding the election. I think when we go beyond that, most likely, there is going to be irreconcilable differences, and I think that you're going to see more movement to states. So there'll be a challenge of what does the central government control, and what do the state governments control, and is there an obedience in a sense. So we are coming more to a fragmented set of circumstances. What we would need, I think, is strong leadership of the middle to bring the country together and isolate more of the extremists, if that was possible, and then to make reforms, because we do have a very skewed type of economy.
So is that Kamala Harris?
But there's no. I don't think it's either of the candidates. Okay, I don't think it's no, it's not either of the candidates. I think that the issue of reform, strong leadership in the middle, I don't see it.
We've been talking about a changing global order. China comes to mind automatically. The conversation right now is a massive slowdown in China, economic malaise. But people seem to be missing the point that amidst all the slowdown, China is still innovating. Renewables, EVs. How are you assessing?
I think that there are real issues in China now, and they changed really in the last 4 years. And that is that they need a restructuring. A lot of the spending, let's say, individuals, 70% of their money was in real estate. Real estate has gone down. Stocks have gone down. Salaries have gone down. And so, and as a result, they're not spending and they're concerned and they're holding money in cash. With deflation, cash is a relatively good asset class. That's kind of the household and the business sector is in that state. At the same time, you have the government sector is a problem because most of the government spending, 83% of government spending, is spent by local governments. Those local governments got their money by selling land for real estate. Okay, there are no land sales, and they borrowed a lot of money, and those that they borrowed the money don't get paid. And so the question is, how are you going to get money into those places to operate? It's a situation that's more challenging than Japan in 1990. It needs a restructuring in order to be able to do that. And then there's also the question is the property values, the property ownership. Is it respected? And Deng Xiaoping during his period said it's glorious to be rich. Is it still glorious to be rich? So you have an environment in China which is changing and becoming a more difficult environment. So it's the time right now that you would see either is there going to be a restructuring and a getting past that. The innovation, yes, there's fantastic innovation. In terms of technology, there's nothing like it other than in the United States. Europe certainly isn't a competitor in that. However, it's very much government directed. Can there still be entrepreneurship and that inventiveness? These are big cosmic questions for...
Given the environment that you have just painted for us, is China still the place to do business? Is China still the destination for your investment money? You've said time and again that you should be invested in
yes,
China.
I just want to be clear about the investing in China. In all countries, there are cycles and ups and downs and so on. And in no country should you invest so much money that it becomes a dominant portion of your portfolio. So in China, I still invest in China. The question is the size of the investment and how that investment is structured. So it's been a good experience for us investing.
What's the size and how are you invested? Because your report suggesting that Bridgewater, for instance, has been cutting down its exposure to China, its holdings to China for the last 7 years.
It's not my place to talk about Bridgewater's
exposure. That's fine, but how do you see investing in China?
I see investing in China as largely a very attractively priced place that now has a lot of questions regarding the issues that I've just referred to. In other words, the economic issues and the political issues regarding property rights and whether it's still glorious to be rich and how that'll work. Therefore, there's a small percentage of our portfolio which is in China and will stay in China through this process.
One of the big forces shaping the world today is technology, AI, Gen AI. You're big on it. You're looking at a bot so that people can have access and have conversations with you. I mean, what do you see the potential? And of course, if it's technology goes wrong, your bot could go rogue. I mean, how are you assessing, the risks as well as the rewards, the benefits of AI and Gen AI?
Well, for the last 35 years, I've written down principles and decision rules, literally many thousands of those, and they have operated as systems, decision-making systems. And that now I'm very excited about that because but you have to train them very well because it's been also specified over a period of time. It is very educational. I've then taken a large team of people and gone through asking it questions and dealing with it and training it. And the reason is a lot of people ask me questions. I'm at a phase in my life where my main objective is to pass along what I've had that it's a benefit to others, and we interact, such as this kind of conversation. And I thought it would be great if I could answer all those questions, or we could have discussions. How are you doing and all that? So that's what I've created. It's called Digital Ray, at least that's the tentative name, and we're beta testing it. We're going to have several thousand people test it and see how that goes, and then we'll move forward. But I think it's exciting when you need to have computerized decision-making working with you, because the time of making all those decisions in your head, that's obsolete. The smart person who thinks, I can weigh everything in my head, they're obsolete. Nowadays, you have to have a partner in terms of those decision-making with the computer.
Ray, final 30 seconds. We also know that Gen AI sucks up energy. They say as much as a small country. Surely that is a concern.
Oh, of course, it's an important concern. The real question is its productivity. I think a lot of attention, a lot of the finances have been in the development with the superscalers. I think the real opportunities are going to come in terms of the users and how that's going to change productivity. In fact, probably invent ways that technology wouldn't be so much of
Ray, we have to leave it there. Great conversation.
Thank
Ray
you.
Dalio, founder and CIO mentor at Bridgewater Associates. We're coming to you live from the Milken Asia Summit. Keep it here with us. This is Bloomberg.